Hi, everybody. It's Jake Senzano, host Jake Gino podcast here with my co-host, the multifamily mentor, the coach, chef, the father of six, the best-selling author, the G Daddy, Gino Barbaro. Gino, how's it going?
Jake, I'm doing really good now that you told me to turn up the mic, make myself presentable.
No, you had to plug it in. I should get you to do this. You got the deep. I'm the G Daddy. Next time you're doing this, not me.
I'm doing good, brother. How you doing?
Always making it happen, big man. Gino, today's guest is the managing principal of
Convolo Capital.
Oh, now this is what I'm saying. He's my interpreter. Gino, what does that mean?
It means with flight, baby. You're in the air. And we're going to ask Jeremy why he named his company that, but continue with the bio, my friend.
All right. You know what? We're just going to leave it right there. Jeremy's a multifamily guy. He's got some ESG he's about to educate us on. I'm not even sure what that stands for. So without further ado, Jeremy Thomason, welcome to the show.
Thanks, guys. Like I said, as we were getting ready for this, I feel like I know you. You guys have a long history of doing this kind of thing, and so I'm a regular listener and contributor in the podcast world. So it's great to finally be sort of meeting you guys over the medium here, and big fan.
Yeah, you know, we're both hermits. It's the only way we actually speak to people now. So it's through the fiber optics. But you know, we know a little bit about you. We know you're from Dallas. We know you're into multifamily. Maybe you can fill in some of the gaps for us here.
Yes, thank you. So I'll try to be brief. So my name is Jeremy Thomason, and at present, I am the managing principal for a company called Convolo Capital that my partners Convolo. That is a Latin term, and it means
Gino said it was Italian.
Fly together with others. I guess in essence, Latin and Italian is sort of the same thing. Anyway, fly together with others, and my partners. There's four of us. The three of them are all military guys. So Army and West Point, National Guard. One of them is deployed right now fighting fires in California. And so they came up with that name. So I can't really be the credit for it, but they're pilots. One of them's a Black Hawk pilot, one of them's an Air Force pilot. And so that idea of flight and their military background, that was just a really cool name. So anyway, that's where it came from initially. But really the bio part of me is born and raised in Texas, and I went to Texas A&M. So it's a military type school, but I wasn't in military. So I feel like I fit in well with my three partners. Finance bro, worked in banking for 20 plus years. Citibank.
What is a finance bro?
Finance bro. So if you
I see the things on like X and Instagram.
That's sort of the way that Gen Zers sort of refer to finance majors.
It means you're like kind of fratty and you like money, right?
Yeah, and I joke because I have two sons that are in college, both majoring in finance, and so they're more the finance bro, but I'm the 51-year-old guy that's trying to be cool, I guess.
You're trying to be the finance bro.
Yeah.
You were a finance bro back in the 80s.
Yeah, I was a finance bro before it was cool. Anyway, I worked in banking for 20 years. I thought I was a lifer in that space, but in 2002, I bought a single family foreclosure. And that is the start of my addiction to passive income, active income, rental property, whatever you want to call it.
You actually started working.
Yeah. Bought a house for $100,000, a 322 in Allen, Texas, which is a northern suburb of Dallas. And that was the first one. And then I bought another one, and I bought another one, and I bought a duplex. And sort of doing that all side hustle, right? Still working at Citibank and then GE Capital, big jobs, leading big teams, very sort of intense organizations. And I didn't expect that I would ever not be working for, one of those big banks. But what ended up happening is over the course of the next 15 years, my side hustle just kept getting bigger, and it kept getting bigger. And then at some point during the great financial crisis, the portfolio was doing fine. I had this conversation with my wife.
Your banking portfolio?
The whole.
Or your real estate? Your
real estate portfolio.
Okay.
Yeah, my single family rentals. They were all occupied, doing well. And the really what ended up. So this conversation was, she was like, I'm supportive of this, but I was the landlord, right? I had 7 or 8 units. I was, as a landlord, you're beholden. You got to, if you have a leaky faucet at home, you can delay that as long as your wife will let you fixing it, but you can't if you're a landlord, right? You got to go fix it that day. And so that's what I was doing, and it was fine, but I realized that I couldn't scale as a landlord, doing all my property management myself, and even just for that matter in single family rental, I just couldn't scale. And so over the course of a couple of years, I was at G Capital, which at the time was the largest real estate owner in the world, and friends that worked in the multifamily side, they started helping just sort of educate me on how multi could work. And I'd always sort of looked at it like, that's big money, right? That's impossible for a guy like me. But I started learning some of the concepts that you guys teach, which is, hey, this is a team sport whenever you start getting in the multifamily world, and you can do it. So I started learning. And then I started investing passively in other people's deals. This is circa 2015, whenever I started passively investing in other people's deals. And it was one of those things where I knew that if I put my money into a deal, that I would pay attention. So I wasn't like a lot of passive investors that just want their return, they want their mailbox money. That's great. But I actually wanted to learn this business. And I knew that if I put my money in, that I would pay attention, and I would pay attention to how sponsors treated me as an investor, and I would pay attention to the KPIs and the operating metrics. And so what ended up happening is 2017, I had invested, gosh, probably 12 different deals passively. And my boss, we were at Wells Fargo at the time, I'd been acquired by Wells Fargo. Um, he left our company to go work for a big real estate company, and he recruited me to leave the banking industry. And so I went to work for a public company that was called CoreLogic, which is a big sort of data aggregator in the real estate space, leading a team of people that were selling software services into the multifamily space. So now I'm like headlong in as a supplier into multifamily, going to all the shows, and I'm passively investing and networking. And then I'm like, I think I can do this sponsoring thing. I think I can be a syndicator. And so I got invited to join as a co-GP
What
on some.
sparked that?
It was a conversation with a dear friend
Because
of
you're going
mine.
from no belief, it's up here, it's a pie in the sky,
Yeah.
to, hey, maybe I can do this.
I think I would started going to like meetups. And so I'm now doing what you guys do, right? I'm going to meetups, and this will sound a little egotistical, but it's not really meant to be that way. So I'm looking around the room at these people and the people on stage, and I'm like, these guys are not smarter than me.
You were just, let's be honest, Jeremy, you were dressed better, and you were like you were being a finance bro snob. You're like, dude,
a little bit.
what are these guys wearing? Fucking Dockers? And you see like Gino next to you, he's got his name imprinted on the inside of his suit, and you're like, that's the kind of guy I'm hanging with right there.
A lot of truth to that. A lot of truth to that, Jake. And so
It's how you show up sometimes, folks, right?
It's right. And so I started like, okay, I can do this. And now I'm on the supplier side of this. And so I'm seeing it like our clients, without dropping names, they're the biggest players in multifamily. And so I'm in their boardrooms pitching to their executive teams. And, I hit it off with these guys. I'm a banker, right? So
Like how many unit portfolios at the time did these guys have?
So at our peak at CoreLogic,
Like what kind of folks were you pitching?
All the big institutional REITs. So your MAAs, your Avalon Bays, Bozzutos, all those names, right? Those are our clients.
Yeah.
And so we're pitching our software services.
What year was this?
This was 17, 18, 19, that time frame.
Oh, so not too long ago.
Not too long ago.
Okay. For some reason, I was thinking it was like the 90s or something.
No, that part of
CoreLogic probably was
early stages. And CoreLogic does a lot in the single family real estate. They're big, huge players in the mortgage origination world, but they had a division called Rental Property Solutions that I led sales for a period of time. So it was a really cool experience because I got to learn about big data and machine learning before anybody was really talking about that, because that's in essence what CoreLogic does. I would be at conference. I'd be at the National Apartment Association conferences or even local ones, and I'd be on panels talking about risk mitigation, and I would make bold statements like, "Hey, do you know that I can tell whether or not you'll pay your rent based on who your Facebook friends are?" And people would be like, "What?" and it's like it's 100% true, but it's completely illegal. So you can't do that.
So okay, we're not going to breeze past this. First
Yeah.
of all, I want to know how the hell you can tell, and then I want to know why it's illegal, because that sounds like a damn good thing to me.
And third of all, it's not 100% true, because if you saw Jake's Facebook friends, he would definitely not be paying the bills. So
I don't know who any of them are.
Well, if you think
I don't
about
even
it,
think they're real. Like they for years they just kept pouring in. I'm like, I don't know who the hell this person is, and I just accept them. Then I just stopped. So
yeah, I mean, and it's rude. It's just it's the data and it's the correlation, right? So you can social engineering and the data about individuals that is just becoming more and more prevalent. So we've known for a decade that those kind of data sets, when they're merged together to include whether or not somebody will pay, it is indicative of other
give me
behaviors.
like the accuracy. Give me like what kind of.
We didn't ever like test it in the market and the reason is because it is illegal. You get into sort of some privacy concerns really quickly, and you get
So the
into
privacy, it's privacy related. I don't want to sound ignorant and stupid, but I don't know why it's illegal, but I'm sure there's a good reason. I'd like you to tell me.
privacy is probably the top of the
Yeah.
list, and then when you get into the topic or the usage case of approving people for apartments or any kind of rental, you
Guilty
get into
by association.
you get into fair housing issues really quickly. So those two things.
Yeah,
are
the only reason I'm not getting approved is because I got Gino as a friend. Lord knows what he's been into down there in Florida.
Yeah.
Think about the insanity of that. Like, they have the data on you, and
Right.
they know,
But they can't use it.
And meanwile, it's Facebook.
I want to use it. I just want
you're,
someone to make sure they
and
pay.
you're telling me that Facebook's not using that data. Yeah, okay, hello. It's come on. Give me a
So
break.
Zuckerberg has got a couple triplexes, and he is aggregating it for that. So you can bet your ass, right?
Yeah, those, and it's not that this isn't the topic of the podcast, but the scary sort of big data and then how we can process that data and then correlate it. And then you add in where your cell phone is and sort of geospatial issues on top of that. Now we're not too far away from whenever you're driving down the highway and the billboards are no longer paper billboards, they're digital, and the ads are changing as you are approaching to the things that you want to see. We're not that far away from that.
I mean, dude, we're there, though. I'll go on to like a social media, and I was talking to Gino 20 seconds ago about something, and then the first thing that pops up is what we were talking about.
Right.
It's the same shit. We're there.
You're right. It's there, and
Yeah.
just becomes how it's used and the usage cases around it.
So how is that? I'm sorry. How does that not affect privacy? Like, that's I'm talking to Jake
Because
about
you checked the box and you
the
said
California
yes to it.
fires. Okay, then the California fires pop up on my show. Or I'm talking to Jake about my nice new Nikes, and all of a sudden, 30 seconds later, or I'm walking by Starbucks and a Starbucks ad pops up on my phone. What is the difference?
Oh yeah, I'm not a legal expert in this, but I think
You agreed to it.
Where Jake is going is that there's agreement that happens, and then that issue I think is going to be taken a hard look at in the current Congress, because I think the scroll through checkbox, I read all this, I think that's probably going to go by the wayside.
Think about if that was challenged, because everybody knows something that no one's reading that shit. Nobody.
Right.
So, but then they come back. Well, it's on you. You should have read it.
Right.
Okay, but let's talk about real life here for a second.
Yeah.
So
anyway, that's the kind of, we weren't really doing
and
that.
I think Jeremy, it discriminates against those who can't read. just saying, I got a discrimination suit coming. Facebook.
Yep.
Coming for you.
Jeremy, listen,
read.
you're in a room with two jabronis like Jake and Gino on stage trying to talk about multifamily.
Yep.
You're working at CoreLogic. What's the jump? Do you go out and start doing deals as a GP? Do you start buying your own deals? Now that you're saying that these two guys can do it and it's not that challenging, it really, I know.
Yeah, Gino's got dog crap on his Nikes. So he's like, man, I can definitely do it. This guy's doing it.
Yeah, I mean, so Gino, I guess what ended up happening is a friend of mine, I don't know if you guys know James Ng he's an old capital guy. He's been a longtime friend for 15 years. We worked at GE together. He put together like a mini mastermind class. And I know you guys do some of that kind of work where you bring not just meet up kind of people, but people that are really sort of in it, valuable, great thinkers. And he brought us together, and there was a group, there was a couple in there that had just put a 200 unit deal here in Irving, Texas under contract, and they were looking to sort of fill out their KP, GP team, whatever
This was
term you like to
2018.
use. This was 2018. And they invited me. They really liked me, and they said, "Look, we think that you've got what it takes. You can raise some money, and your sort of balance sheet, net worth, those kind of things will help us get the loan approved." And so
Did you raise any money up to that point?
No. Everything I'd done at that point was either
They just
passive
believed you
investment.
could because your network.
They did, and so I think I'd raised $1.5 million for that deal.
Well done.
And so, and it wasn't hard, because at this stage of the game in life, your peer group ends up having at some point some discretionary income that are looking for alternative ways to invest. So did it, and it sort of empowered me at that point. I was like, okay, I can do this. I'm in this industry. I have run my own stuff. And so then I formed my own sort of group, and we did deals. We bought some deals. And so I've done now about probably a dozen deals where I've been sort of the lead on or co-lead on, where we've raised money as syndicators
All
and take
multifamily.
all multi. I haven't gotten into any of the other asset classes, nothing against them all, but I'm just a strong believer in the fundamentals of multifamilies. People got to live somewhere. And that sort of overarching thing. And I'm in Texas.
It's just easier, right?
Yeah.
If it's something like that where people make it a hard time to build, and folks need a place to live, you don't have to be, because we're like talking about Facebook and stuff. You don't have to be coming up with the next gadget or app or something. Which, dude, that would be exhausting, right? Like we're kind of on easy street over here, knock on wood. So.
Yeah, I mean, so then I ended up sort of doing that, and at some point, the CoreLogic wound down. CoreLogic ended up divesting our business unit.
Oh, so you're doing both. You're double dipping.
Yeah, at this point, I'm doing sort of syndicating, sponsoring, a lot of long days, because we would do all that stuff at night while I still had a pretty big job. Now, the job was in the industry, so there was a lot of tangential benefits of, going to all the conferences and thought leadership. And whenever you do all those things,
if you don't want CoreLogic, can I offer you an investment opportunity?
I mean, sort of. Yeah, it's one of those.
Drop your card in this fishbowl, and you may get one of two emails.
You know how it is, though, when you're in this space and you end up, you guys are good examples, right? You talk to a bunch of people, and so you'll get educated on all these things. And so then whenever you are
That's why we do the podcast.
When you're talking to investors, it's one thing to get investors from the podcast, and it's another thing I'm now in front of an investor. And so if I can talk about all these subjects and they ask me about anything, I'll have something to say. Now, if you want to ask me about the next drug coming through the FDA or something about cybersecurity, I'll just look at you like blank stare. I don't know much about that stuff, but you want to ask me about housing stuff, I have a lot to say about almost every subject within it. And that's confidence inspiring to a potential investor that's like, hey, I might know you, or it's a referral. Integrity obviously is critically important, skins on the wall and experience. But if I'm talking to really any potential investor and they ask me any question, an underwriting question, because I'm in essence a finance bro in disguise, or about laws that are being passed in Austin, Texas, or in Washington, D.C. that affect our industry, the FTC and junk fees, any of those kind of things I can talk about. But I'm
so you had to be a resource to your teams then early on from a financing perspective,
right?
From the background, right?
Yeah, that was very helpful, because I was used to, balance sheet and lending and underwriting and spreading financial
but
statements.
I would guess the relationships, no?
For sure. I mean, those kind of people, like my colleagues at those places that were well-paid people, as I'm talking about this just on a, when we're together or whatever, I mean, dozens of my former colleagues are investors with me. And so,
but you had some inside baseball, like, because, there's a difference in, where you're going to get the debt from, right?
Right.
And so what's your preferred multifamily debt scenario? Like, where are you going?
Yeah, so I've learned, as everybody else has learned, that it's hard to beat the agencies if they're competitive. Their terms,
but then there's variations. You could go to like a, quote unquote an agency, but they're not a direct lender, and then they're going to the direct lender. Or there's like three, I pick on Atlanta because I feel like everything in Atlanta is a daisy chain. There's three brokers in between. So talk about when you're working with an agency, and feel free to give them a shout out. We got, who do you use? Who are you using for your lender?
So whenever
you're going Fannie, what are you doing?
Yeah. So my first call whenever I'm on a deal is I call James Inc. And so James is that name I referenced
Are
before,
they
but
are they a direct lender?
so they are Old Capital is a mortgage brokerage originator. So they're a broker, but then James knows all the guys. So the last deal that me and my partners did was a Freddie Mac small balance deal. We closed about 4 months ago, and that one was placed through the guys at Regions Bank. So James connected us with that, and then we're dialoguing back and forth, and then James is working for us in that sense to make sure that everything is squared away.
And
And that was a
Regions is
Freddie.
the dust lender there. Is that
Correct.
yeah?
Yeah, that's the way I do it. Now, I will say this. I mean, all of us sort of learned the hard way. The part of the story, the background story, is when I left CoreLogic, I went to go work for a firm based here in Frisco, Texas, CAF companies, and they're vertically integrated. They have about 25,000 units, a lot of institutional capital, and so I was leading investor relations for them, and then ultimately led asset management for them, and that experience added to my cadre of skills to be able to talk institutions. So without name dropping the institutions themselves, we regularly faced off with the Wall Street firms as investors, equity investors in our deal. And I'm now leading asset management for the group. So my asset management team is faced off daily with the institutional capital. And so a lot of times, I know you have a lot of
That
syndicators in
probably
your.
helps when speaking the lingo at
Oh, for
times, right?
goodness, it
Having
does.
those at bats go a long way.
Yeah,
Yeah.
those you're exactly right. I love that analogy, that baseball analogy there. Those at bats, those reps, as you're talking to, fill in the blank institution, those are really because those guys are wicked smart. Wall Street, lots of them are Ivy, and they've chosen their path into commercial real estate. And what's good about that space is that they can write very large checks. So
That's always a good thing.
as a syndicator, right, one of the bigger challenges we have is, it's a bunch of $100,000 checks. And so it's really appealing to think about one guy, one institution that can write one big check. And so a lot of syndicators that are probably in your audience, it's like, I just got to get to the institutional space because I don't have to chase all these investors and capital calls and all this stuff that's making it so hard. Institutional world. Well, I'll tell you that the good of the institutional world is the fact that they can write one check and that they can do a lot of help with underwriting. The bad of it is they're all up in your business all the time. So it's not passive equity like a lot of syndicator equity is. They're asking hard questions and they have to approve things. And sometimes their bureaucracy slows things down. So the bad of the institution is what you might expect, which is a whole lot of introspection, a whole lot of bureaucracy that you have to fight. But they can write
Let's look at
a
that
check
from
for
a
$50
let's
million.
but also on the positive side of it, they're busting your balls, but it's the same thing that you get with Fannie, and it's the same thing that you get with the insurance companies.
Sure.
They're going to scrutinize Fannie. They're going to scrutinize your insurance to make sure that they're not screwed, which is insulating you. That's a good thing versus using the community bank. Insurance companies going out and saying, we don't want grills on the decks. We want this. 30 inches on a railing is not going to fly. All of these things are going to make you a better investor if you suck it up too. And then maybe down the road, if you don't, once you've been through that exercise with this type of equity, maybe you move on because it just gets a little annoying, but you know the things to look for because they're actually educating you as you go because they don't want the deal to mess up. So with that train of thought, let's talk about cash management versus spreadsheet management. And have you ever struggled with it? And where do you see early investors go wrong? Because I think, especially coming up, right? If you haven't run a business before and you're relying on Yardi to give you the information, managing that cash in the bank versus that spreadsheet is wildly different. And it may be easier because the rents are coming every month, but they can vary. So do you have any stories on that, or
Oh
can you?
man.
Because I'm big on that. I love cash management. I pride myself in it. I think it's probably one of the best things that Gino and I have done in our business. And I also see there's lacking of it out in the real world sometimes.
Yeah, I'll give you a relatively short one, and it's indicting of me. And so, just the idea that I'm completely vulnerable here is that I have a deal where we uncovered a major issue with our property management company and the team, and um, we uncovered it too late. And the problem was that from a cash perspective, it looked like we were okay. But what we realized is that um, the property manager was outsourcing all of our work orders to vendors. So as I'm an asset manager, I'm watching the work order sort of trackers. I'm feeling okay because the work orders are getting done. And but I'm not realizing that it's not the on-site team that is
So
actually doing
are
the work
bills
orders.
accruing that you're not seeing?
Correct. So we were basically they were outsourcing, and then the invoices were not getting put into the system, and I can't see that.
Was this the first time you worked with them? Like, how does this happen?
Well, to protect the innocent, they
Are
very
they
large.
innocent?
Well, that's gonna we're gonna
Or
we're in,
did you click agree to the agreement without reading it?
yeah, I mean, here's what I would.
Software acknowledgement, 25 pages.
Yeah,
Oh, it looks fine.
it's funny. I mean, that's honestly part of the property management agreement where you're talking about that is like, the insulation of the property management firm from those kinds of things. But let's just sort of tie a bow on this and say we are in litigation on this topic, and we have not resolved it yet. And it's one of those things that is caused a cash management disconnect because we're like, okay, so vendors come out of the woodwork. We fired this property manager. We have a new one, and now vendors start coming out of the woodwork
Sounds
saying,
like a class action lawsuit.
you owe us money,
Jesus.
you owe us money, you owe us money," and we're like, for what? And we start going through and figuring out, and there's all these
And now you got
invoices.
to line up work orders. Did it actually happen? Did it not? What a
Yes,
nightmare.
and it's a year ago, right? So these work orders, and you
Ugh.
can't even really tell, like, and the
We've
unit
already
and
turned this unit. What the
yeah,
hell?
right. So it's like, is this real? And then you start questioning things. And there's a lot more to this. I won't sort of get into. You asked about the cash management, but that's a good example of
No,
whenever
this
you're,
is the stuff that benefits folks. We're here to benefit the folks. This is a real life
yeah.
story where, hey, watch out for this because this happened. This is real. And I'm sure it's caused some sleepless nights at this point.
Oh yeah, for sure. And we've had to suspend distributions to investors because cash is tight, and now the
Well, think about
lender.
it. Like everyone's out there. Oh, we did a variable rate loan and we're getting screwed, suspending distributions. We got hit with insurance, suspending distributions. All the things that are like the narrative of multifamily, and then this shit comes up and bites in the ass.
Yeah, thankfully we have fixed rate Fannie on this guy, and or we would have been sort of dead in the water if we had had a
Well, because
variable.
this is out of nowhere.
Right.
Yeah.
We're going to fight through it, and we have, and we're going to live to a better day on it. It's just take whenever you're in the actual court system, it's like measured in years. That's just so the way it goes. So that's a good example. Just as you asked that question about how if you're the asset manager or the ownership group, and you've got third party managers that are doing their thing, if they don't put the information into the system, then you're going to be blind to it. And so if it's not showing up in Yardi and Entrada or Resman or whatever, well then, and you're making decisions based on what you see, then, and those decisions are not, they're not, they might be wrong, or you may be in a cash situation like we are. And anyway, you just got to fight through it. So that's a real life example. Then I would say for the listener is you got to figure out a way to, um, do your own sort of trust but verify on what's showing up in the system. So this gets into, being on site, doing vacant walks, doing the kind of things that asset management needs. Not necessarily owners, but if you're the owner and you don't have an asset manager, the asset manager's job is to make sure that the strategy is in place for the business plan and making sure that the property manager is executing it. The property management team is not usually strategic. They're usually tactical execution. And to the extent that you guys could get, or that in this case, that we got disconnected from our property management and our asset management, then caused this problem that I'm now fighting through that has revealed itself into a cash crunch. We'll get through it, but those are the kind of things that you can't learn in a seminar. You don't get to read in a book. You just have to deal with them. And then when you have enough gray hair like I do, those are the experiences that I can draw to and talk about even with investors and
And
say,
then
hey, here's
the next property management company that you interview, you're going to be stressing on this. How do you pay and how do you, and they're going to be going, what the hell is he doing this
Right.
for? And it's because I've been screwed. Like, you put these things in place because you've been there and you've lived through it. And the next guy's going to pay the piper because you're going to be grilling the shit out of them
Right.
over these types of, issues. One thing that I would say to the folks, so we're vertically integrated. We actually have our own
Yep.
property management company, and we clear the decks every week. Every week we're paying the bills as the invoices come in. We're not perfect, I'm sure some, but I think for the vendors, they like it because they know when they submit that invoice, they're getting paid that week. And I also do it in a professional level as well. Credit cards, whatever, just clear them out because you don't want that shit to like sneak up on you, right?
Oh,
And
yeah.
I think one of the things that like benefited us on the property management side is we do that, and it helps with the cash management because as it's coming in, it's getting cleared out so that you're not kind of getting the sleeping
Oh,
on
yeah.
you there. Yeah.
Look, that's a great way to do it. It's the way I try to do it personally as well. And it's one of the big benefits of vertical integration is that property management team effectively reports to you. And it's one of the downsides of whenever you use fee management, because as aligned as you may be with the fee manager, you're not always completely aligned. And sometimes big, huge,
And
reputable.
we've always attempted to make it one too. Like even though there is asset management going on and whatnot, you want everyone to be working towards the same goals. I
Yeah, you
think
do. And
yeah.
there is, in a way I would describe it, when I led asset management for a vertically integrated large firm, I would, had a great relationship with my counterpart that led property management. But I would explain to her is like there's a healthy tension between asset management and property management. There just is. There's always going to be tension, and so our job as the leaders of the organization is to keep it healthy, because you don't want to be pointing and you don't want to be blaming and
I
all
think
those kinds of
delegating
things.
helps. If you can delegate some of the responsibilities to the PMs
Right.
that are actually maybe would fall traditionally on the asset managers, they understand what's required. Especially when it's like a bank inspection or an insurance inspection or something like that, bring them in as a part of that, so it's not like this. I'm shaking the stick at you or something, right? Like you messed up.
Whenever I got into this industry in a more direct way, it became very clear to me that the property management side, so the operator side of our business, they have a pretty good handle on the P&L, pretty good handle on budgets, et cetera. But it usually their understanding stops at the NOI line. And when you start going below the NOI line, even down to the net income line, and forget about the balance sheet. They don't even think about balance sheet at all. So there is a disconnect in the property management world of just education of things that are below the
Well,
NOI
and you're not
line.
even talking cash now, probably, right? Because if we circle back to the cash side of it, all I know is our group. I've never worked for another company, don't have any exposure, but I'm guessing that there's very little cash exposure in most circumstances. I may be wrong. What's your experience?
Yeah, I mean, I don't think you want your on-site teams to be that involved in the cash. I mean,
We share with them weekly.
I think my point is that
Yeah.
it depends on, your PM, their skill set. This starts to become the individual and what their background is. In my experience, and part of the reason
I
why
like the
we
transparency so they know personally. But
Yeah, what we try to do is try to show them at my former firm, we would try to build even incentive plans around controllable NOI, so they could really understand, hey, look, this is tight, right? I know you're used to saying we need new felt on the pool tables every quarter, but you know what? We'll hold off on that expense. And so that's sort of a ramen and water kind of diet that you have to have at some point when cash is super tight. But um, you do have to reemphasize that message over and over again to the on-site people, because that's not necessarily how they're wired. They're usually wired from a customer service perspective that is see problem, fix problem, see problem, fix problem. How much does that cost to fix the problem? Okay, that's an important, but that's not immediately how they think. They're just see problem, fix problem kind of people, which is great. You
and you
want
want
that.
you want that for sure because the flip side is the poor service, right? But
Right.
you want everything done within reason. Yeah.
100%. So that's the it starts to affect resident experience. And so resident experience then very quickly gets into some real issues around renewals and retention and everything that happens with vacancy costs, and that's a huge hidden cost that hits the P&L 4 or 5 different places, hard to unmask, but it's a resident experience thing at some point if you're not taking care of the needs of and so you need to have that customer white glove sort of mindset on-site team, but you also need them to understand what's the cash situation, because I can't reorder pool felt for my pool table in the clubhouse every quarter in some years. And there was a time not too long ago where you actually could. And sometimes people that have been in the industry a long time sort of lament for those days that it sure was better. It seemed like it was better about 5 or 6 years ago. I was like, well, it was better. Cap rates were compressing. We didn't even, all these guys that have said,
You had
hey,
better interest rates and you had less competition, right? Let's be honest.
track records from guys that have been in this space that, last 10 years, and they say, hey, our average IRR for all the exits, it's 23, 24%. That sounds awesome. And I would submit to you, well, if you back out cap rate compression from your deals, what was your IRR? Now, that's an exercise that most people would sort of look at you funny on, but the reality is a lot of those track records that have really big, impressive numbers were on the back of cap rate compression, which everybody
Riding
loves.
the wave, baby.
I love it. Hey, you know what? I sold an asset that I did, my first deal that I did as a lead, 30-month hold. We got a 33% IRR to our investors. It's because we underwrote a 7.5 exit cap. And, we sold it in March of 2022. Like the very last moment we sold it before all hell broke loose with rates going up. So that was, I wish I'd done that.
The actuals at the time were what, a 4?
Oh yeah, it was. Yeah, I mean, we basically.
There's a
sold
deal
asset.
listed in. We were looking at a deal the other day, Gino, in Chattanooga. The actual cap rate on the thing is like a point something. I'm like, fellas, this is not going to move right now, right? Like, you might want to look in the mirror. But what were you going to say, Gino?
Jeremy, you had mentioned cap rate compression. If you are out there and you're a limited partner, just ask the syndication group or the general partner, what has been your NOI growth, right? If they don't have the same cap rate, if your NOI was 100 grand, well, where is it today? Oh, it's 105. So you've grown NOI 5% over the last 3 years. That'll give you an indication of whether they're doing a good job or not, or if they're utilizing the market itself. I think that's such an important question. And I think as you've seen cap rates going from, they are starting to decompress, it is going to be more challenging. And Jake, a lot of those deals are just going to be sitting around and they're not going to trade, my friend.
Hey, if someone's got a deal they want to sell, give us a call. We're looking. Yeah. It's Q1. We're on the hunt. Okay. We need 150 units this year.
There's been a lot written on this, and I think you guys have talked about on some of your podcasts too about, first quarter last year and then into the second quarter last year, you saw some big players push their chips in billion-dollar increments into our space, not trying to time it right. They just saw what was going to happen with supply falling off the cliff. They could see that the inflection point had happened on interest rates. Now they're not coming down as fast as we would like, especially on the 10-year, but there was an inflection point for sure. And if you're in markets of the country that still have migration positive, so my investment thesis is simple. It's like, I want to be in landlord-friendly states. I want to be in positive migration states. And I never want to put a floating rate deal together ever again. I like matching. I like taking the risk of floating rate off the table altogether. So even if I have to execute a fixed rate agency debt at 6 or even 6.5, if rates do end up coming down, it's my choice to refinance that deal whenever it makes sense with whatever my prepayment strategy was, versus, oh gosh, I got to buy a rate cap. My cap's expiring and now it's 5 times more what I paid for it. And that's in essence the story that we all learned the hard way in our industry from really coming out of COVID for about 2 years. The fixed rate and the agency options were just, if you were doing that, if you're underwriting with those expectations or those data points, you probably weren't winning the deal. And so you ended up sort of matriculating to these bridge lenders, floating rate. And the idea, obviously we know now, is while those are the deals that have distress in them right now. And so hopefully you're with a sponsor that has good liquidity, good operations, transparency, and all those things, and they've been able to weather the storm. Even good assets have had challenges. We have an asset.
It just seems like the junk has been trading. Like, I see so much, that, this deal just closed, and you look at it and you're like, I would never buy that. Right. And I feel like all the deals that have come across my desk that has closed from brokers in the last, 12 months, it's just been like, kind of hold your nose. You can tell by looking at them, you don't really
Jake,
want this. So it's the stuff
you
that's in
would buy
trouble.
it at a 30% discount. Let's be honest. If the price
Well, that was the other thing I was about to say to him, is that some of this stuff that's going, and I don't think they are, and you are correct. You're absolutely correct. But it would take a shit ton of work to make that something I would want to own. And a 30% discount that's the number. I think everyone is very clear. The stuff that has traded, 150 a door, that's dog poop. It probably needs to come down to about 120, 115 in many instances. I know that's very general or whatnot. Pivoting real quick.
Yes.
Texas, you're going to see, and this may be too soon, I apologize to the people that are affected. Are you going to see a bump from the stuff that's going on in LA? Or you think the immigration from California to Texas is going to speed up from these wildfires?
It certainly could. I think it's probably too early to tell, but just the tragedy of that. And
what
then,
numbers do we have on this? Is like 400,000 affected? Is that even? I may be off on this. Is that correct?
I don't know what the numbers are, so I'm not the right person to ask, but they're big numbers. And even the people that were spared, like their house was spared, whether that's an act of God or just random, they, what does their neighborhood look like? It's gone. So it's like there's
Right.
going to be some people that probably just need to relocate. And I expect that.
I'm wondering if people get fed up, with it, with sort of the situation, and if places such as Texas and whatnot continue to see a net positive migration from California.
We will. I mean, Texas has been number one when it comes to sort of the in-migration, whether it's Illinois, New York, California, any of those places, and I expect that will continue to. Dallas Fort Worth. Over the last 2 years grew by 250,000 people. So it's on its path to eclipse Chicagoland at this point and be the third largest metropolitan area in the country. So
I mean, if your house burns down and you have to go back and rebuild in what appears to be a bureaucratic nightmare, right, to get permits and things is what I'm hearing. Maybe wrong. Or you can just go buy a house at, what do you think, LA versus Dallas? 50% on?
Yeah, probably
50% off, right?
Yes.
I mean, the weather's not as good, but it's a lot of money. I don't know.
Yeah, I mean, there's a lot of stories, and there's a lot of people that have posted about this in the last couple of years. So the point is that Texas is very pro business, very pro landlord, and there's migration to sort of help with any potential sort of starts and stops that are happening. I think there's been an inflection point on where interest rates are going, maybe not as fast as we would like. And then, I feel like there's so many people that are writing about what supply looks like over the next 2.5 years. It just falls off the cliff. And so all of those things are why I feel like if you can figure out a way, very bullish, if there's ways you can put your chips in right now, even if it's like, I feel a little bit nervous about this, figure out a way to get the deal and you'll be happy, because I think 2 years from now, 3 years from now, we'll all be looking
at a quality deal, though.
Price points that are right now. It's like, man, I wish I would have bought more.
And a good asset, right? I think that's the thing. Gino, you've been quiet today, man. What's going on over there?
I'm just trying to absorb the whole conversation with California here. And I think, Jake, a lot of the people that lost homes in California, that are in those parts of California, don't want to move. They just love where they are. It's a very exclusive neighborhood. That's just they identify as Californians.
Unfortunately, it was, though. You're going to go back. Are you going to go back and build? Because it's to his point. I mean, you look at these pictures. I'm not there. Yeah. It looks like they're gone.
I think what's going to happen is they're going to have to speed up the process tremendously. I think they're going to have to become nimble, because when people who are super wealthy have the opportunity to change things, because if it's not in my backyard or it doesn't affect me, right, I can't do something for 5 years. But now it's like a multitude of those people. I think it's in the government's best interest. It's in the mayor's best interest to say, okay, let's sit down and let's figure this out, because insurance is really challenging right now. A lot of these homes aren't here. Let's speed the process up so we can at least get a boom going.
You're going to see mini ponds in everyone's yard with pumps, and they're going to have the fucking the stadium sprinkler system running around their house, right?
I think they're going to figure it out. You know what? It's just too big of a state, and it's too important of a state not to figure it out. And I hope that they've seen what they've done to the state, that they say, okay, let's reverse some of these policies. Let's try to figure that out, because it's too important. There's Silicon Valley, there's AI, there's tech. There's just a lot of stuff that's in that state. They grow a ton of our food. It's a beautiful place. I think they're going to have to sit down and figure it out, because we need that state. It's to me.
I learned a new term today, Gino. Nihilism. You know about that?
Oh yes, you made me watch that show with
Yeah.
Tucker. Yes,
Just
It's
saying,
incredible.
for the folks out there, look up nihilism. Check it out and see what you think.
Let's take a quick time out to hear from our sponsor. This episode of the Jake and Gino podcast is brought to you by Wheelbarrow Profits, the premier multifamily education community. Wheelbarrow Profits proof is in their results. Their members have closed over 86,000 units. That's over $5 billion in student deal volume. Are you serious about taking your real estate game to the next level? Do you have the confidence to take action? Schedule a call with the Wheelbarrow Profits team today and supercharge your real estate knowledge. Build lasting relationships through unparalleled networking opportunities. Obtain lasting knowledge on how to buy multifamily real estate with intensive training. Gain hands-on experience through their live events with like-minded individuals and industry professionals, all while experiencing the personal touch and family atmosphere that set them apart. Visit wheelbarrowprofits.com for more information.
All right, we are back. Gino got off that one quick. He's running away from me today, but we'll leave it there. We like to promote different things that have benefited folks and things. Any books or any podcasts or anything that you've been absorbing in the last year or two that you want to recommend throughout there that specifically added value to your life?
For sure. There's so I'll drop 3 podcast names that you guys probably listen to, maybe not. I don't know. I'm a big fan of JP Conklin, the rate guy. If you haven't listened to him, he's entertaining, even though he's a just insufferable Philadelphia Eagle fan. And as a Dallas guy, that's always fun.
You getting Dion or what?
Man, it is intense right now.
Dude,
Oh
you
my
got to
goodness.
do it just for the spectacle.
I
Okay.
mean,
Let's
talk
just
about-
bring the show. Okay. Bring the show. The kids graduated. Let's have some fun with it. Win or lose, everyone is a winner at that point. You're going to be making some money.
Yeah. I just got
Whatever
through-
those blenders or whatever he's selling, those things are going to go flying, right?
Man, I just 30-minute drive from where my last meeting to get back for this, and it's all the tickets talking about.
Dude, Dion comes in, man. That's going to be the show.
Oh my gosh, what a circus! I heard somebody say, "Dion, your head coach, get Michael Irvin as your offensive coordinator, and Charles Haley as your defensive coordinator." I was like, "Oh my gosh, what kind of crazy would that be?"
Maybe just have him do a podcast. I don't know.
Yeah. Anyway, JP Conklin, you guys should listen to him. He actually, you guys should both listen to his current episode, because he talks about what he would do if he was the czar to fix the issue in California with the fires. He had a lot of personal connection there. Really good podcast this time around, and he's really good on interest rates too. So if you want to,
When's JP saying we're going to get some relief here?
It's interesting. He does his lead pipe locks at the beginning of the year, and so it's not as bullish as we would all like it to be. It's like his view is that the yield curve is fixing itself, so there should always be an upward sloping yield curve. And so as the short term comes down, the 5, the 10, the 30 should be high. That's a normal upward yield curve. And so he's like, so the 10-year making a run probably to the 5 handle here soon. That's not out of line with sort of a normal, healthy yield curve. The problem is that that's what we price our fixed term loans off of. And so we all need the borrowing costs to come down. And so just because the Fed's bringing the short-term rates down doesn't mean that the long-term rates are going to come down nearly as fast. But I do think that in general, interest rates are going to be coming down. They just might not be coming down as fast. But I really like his podcast, because it's a deep dive on interest rates, which is a big part of a leveraged business. I'm also a big fan.
It was everything in multifamily. The minute rates went up, it blew the whole thing to shit.
Totally true. 2 others just to drop. I love Jay Parsons' new podcast that he does, The Rent Roll, and I love Andrew Bowen.
Is that the population guy, Jay Parsons?
Jay Parsons. He works for.
I feel like we've had him on. No, Gino? Is that something?
We've had him on the show twice. He's got a really big LinkedIn page. I mean, he does a lot of analytics and a lot of data, and he's always blowing up the rent, the whole rent as far as rent control talks about rent control, how that's a fallacy. And he's got a lot of data. He's got an
He's
amazing.
brilliant. He's
He's
brilliant.
a really smart dude. Yeah.
He's a friend of mine. He used to be the chief economist at RealPage, and so he's a good follow on LinkedIn, and he's got a relatively new podcast called The Rent Roll. And then the last one is Andrew Bowen, who was also a thought leader at RealPage, now works for LeaseLock. I work really close. I have to do some consulting work for LeaseLock, and he does a podcast
It's
called
like
Unscripted.
insurance for renters or something like that.
Yeah, it's lease insurance. Yeah, so it's the idea of security deposits is sort of the old way of doing things. There's better ways to do it, and LeaseLock is one of the industry leaders there. So I'm a big believer in that value prop um, as well. So I do some consulting work for them, and so those guys are all three of them are my friends, friends that I listen to his podcast, but then this business is about networking, so I'm like, hey, I really like this guy. I'm going to reach out to him. And then the next show, I'm going to go meet him. And then I'm going to go have lunch with them. And then they become friends. And so that's what you do in this space if you're going to be effective. My friend Michael Becker often talks about this business is an unfair business. If you are the people that have experience, they're the ones that see deals. Well, how do you get the experience? Well, you get in the game and you don't sit at home behind a screen and just wait for people to come. You do what you guys do. You get out there, you meet people, you talk to people, you learn new ideas, you go to conferences, you learn about AI, you learn about centralization, you learn about advocacy, you learn about all these things. And as you're learning, you're developing your network, which is good for investors, cultivating new investors, but it's even better just to be as a student of the industry, to be a leader in this space, and to help the next generation of leaders come up and be a part of that.
Wow. All right. Last question.
Yeah.
Best market in 2025, best U.S. market to invest in.
I'm biased, but it's true. I invest in two places right now, and they are where I live in Dallas Fort Worth. So Texas and Atlanta is the other market where one of my partners lives. I like those markets for a lot of reasons. There's probably pockets of other markets. I know the Midwest has seen some good things lately, but I think long term the diverse economies of Dallas Fort Worth and Atlanta and across multiple industries are winners. Migration to both of those places are winners. And the supply, even though there's been a lot of development in those areas, that's also a winner too, because in Dallas, we've absorbed the record amount of supply. So what happens when the supply falls off the cliff? I don't see the demand changing. So I see over the course of the next 3 years, we could see some really significant supply demand imbalance, which is horrible for the affordability crisis that we have. But it's really good if you own
Especially if you
units.
hold for, if you bought pre 2020, held it, and then you come
Sure.
around, you're going to be really good.
Yeah, so I like those
I'll
markets.
agree with you if Dion comes to town, because if the football team's winning, the economy's doing good.
Oh boy, yeah, that'll be like I said, a circus.
All right, Gino, take us home.
Jeremy Thomason, the self-proclaimed finance bro, gets into banking. And he stays in banking. He loves corporate, starts moving around. His first epiphany or his first love with real estate comes in 2002 when he buys a single family home. Throughout this financial crisis, he's got some units. Starts working at CoreLogic, and he's in the business. And he's saying to himself, I can't scale this single family portfolio thing. How do I get into this multi? I'm not there. As Jake likes to say, it's this pie in the sky kind of thing. It's not me. I can't do it. And then he starts figuring it out. He starts investing passively, which is the first step. He's earning and he's learning at the same time. And then
he was learning Latin at the same time.
And he goes to an event and he says to himself, well, there's some, people in here that I'm probably a little bit smarter than. I don't know how they can be so successful and what's holding me back. Shatters that limiting belief and then starts investing in deals. Meets James Eng down in Dallas and he figures out, you know what? I can do this. Starts raising capital, $1.5 million on his first deal that he raised. And there from the races starts becoming a lead sponsor. And we're here at 2025 and he's continuing to do deals.
Well said, Gino.
Yeah, that was a great summary.
He's really good at it. He's hiding back this whole time and he just pops that one off. So well done, Gino. And gang, as always, we believe in buying deals for the long term. Think in decades. I'm Jake. He is the G Daddy. We make it happen. We'll see you next time.
Thanks, Jeremy.
You bet.